Active Investor here, bringing you another independent analysis. This time we're taking another look at EBIO. It's 11 Biotherapeutics, and the chart we have today is a 15-minute chart. Each candlestick representing 15 minutes of trading, and we have 5 days on this chart. The entire trading week from last week. We have Monday, Tuesday, Wednesday, Thursday, and Friday. So with that said, I just want to give an overall outlook on what we could be expecting for next week. I had a couple of requests to make this video on EBIO, an update for my last video. So I'm going to make that, and we'll see what we can kind of expect heading into next week. All right, so let's just kind of start. You can see I have 91 cents, 95 cents, $1, and $1.07 as my pivot points. So while those prices are actually fairly close together, it is actually about a 15-cent difference from $1.07 to 91 cents. A little over 15% there, so it is actually a fairly decent trading range. And $1.07 to 91 cents is the trading range that we've seen for a while here on EBIO. You can see that we had a lot of consolidation at 80 cents, however. But based on historical data, we didn't test 80 cents all that much, so I don't feel comfortable calling that strong support. But just keep in mind that you could technically consider that a soft pivot point or a soft support level at 80 cents. But my main pivot points are that 91 cent, 95 cent, $1, and $1.07 area. With that said, let's just kind of take a look at what the price did. You can see we bounced off that 80 cent area, pushed up above 91 cents, but we couldn't hold those levels, broke down below again. This time we had a really nice run up though on Tuesday. Tuesday was a great day for EBIO. It opened up all the way at about 85 cents or so. And well, actually that would be, I'm sorry, that wouldn't be 85 cents. That would actually be 83 cents, right on the money. So we opened at 83 cents, and we actually closed all the way up at $1.12. So Tuesday was a great day for EBIO. Wednesday, that's when we made that high of $1.25, but we just couldn't hold that level at all. We consolidated down a bit, and we touched that $1.07 pivot point for a while, broke down, touched that dollar pivot point for a while. A few times we tested below it, but we ended up really just kind of closing on it that entire trading range the rest of the day. Thursday, we just kind of broke down some more, and Friday we also broke down some more, and we found a lot of consolidation here on Friday. Wow, that was the worst looking arrow I've ever seen. There we go, a little bit better. So we broke down below and had a lot of consolidation. Thursday and Friday just seemed like days of consolidation, really, these last 2 days. But Friday is starting to look kind of ugly. I'm just going to be honest with you guys. We can see that all the moving averages are above our candles. That's really bearish. We don't want to see that happening ever. So if you can literally see that the blue line here, that's our fastest moving average. The candles literally were closing on that moving average, so it turned into resistance. And we have that yellow 20-day moving, or yellow 50-day moving average rather, also acting. I'm sorry. That green 20-day moving average. I apologize for that. So we have the 20-day and the 10-day moving averages, the blue and green lines, acting as resistance now. You can see the price literally got denied almost every single time here. It acted as support briefly, but we broke down below again, and it's now resistance. So we have a lot of resistance to cover heading into next week for EBIO. We have all these moving averages acting as resistance, but the good news is that they're all in this trading range here. This trading range being around $1 all the way to about 91 cents. 91 cents is a little bit further below our price though, so let's just say around 95 cents to $1. We have a lot of resistance on the way up to $1. Now, in the past, EBIO has always seemed to retrace back to $1. We've seen it time and time again the last few weeks, but there's certainly a lot of resistance now. The moving averages are not terrible looking on this 15-minute chart, but they are starting to look fairly ugly. You know, we have the 10, the 20, the 50, so that's all bad. We don't want to see it in that reverse bullish order, but we have the 200-day and the 100-day there, so that's not all bad. What would be all bad is if the 200-day was above the 100-day, but as it is now, the 100-day is above the 200-day. Still, all those moving averages being above our candles is not a good sign to see. We need to see that push up. So heading into next week for EBIO, I'm going to be looking at support at 91 cents. If 91 cents doesn't hold, we don't have support all the way down until 80 cents, and the 80 cent area is soft support. It might not hold well at all. It might, but it's also not strong support, so just keep that in mind. If EBIO breaks the 91 cent support, it'll definitely go down and test that 80 cent area. And if that 80 cent area doesn't hold, this thing might go into free fall. So just a heads up. It's still not looking so great. You know, we couldn't hold the dollar level, which is troublesome for me. But on the flip side, from 90 cents to $1, you could be looking at about a 10-cent swing. So I'm going to actually be considering that. If the price hits that 91-cent area and starts looking bullish, I might actually try to buy into this and swing trade it up to $1. Because like I've said, time and time again, we've seen EBIO retrace up to $1. But there's a lot of resistance on the way up. That's the only thing. So we really got to see on Monday what the price does. If it breaks down below 91 cents, then we might see it fall all the way to 80 cents. And 80 cents will have to hold. If it doesn't, things are going to be looking really bad. On the flip side, if it bounces off 91 cents, we could see it retrace up to $1. And whether or not $1 holds and we end up testing $1.07, that is up for debate. There's a lot of resistance on the way up there, so we will see how that plays out. But $1.07 is the final price target I'd have on a swing up to $1. If it's still really bullish and it pushes up to $1, I'll be setting my sells at $1.07, and I'll gladly take a 90 cent to $1.07 swing. That is a very nice chunk of change indeed. So moving averages out of the way, candles out of the way. Let's take a look at the relative strength index. I'm going to make my oversold points here from overbought. We barely went oversold here, but let's plot it out anyway. And we went overbought here from oversold, and over here. Make that a little better, a little cleaner. Oh, it's actually that tiny little symbol right there. Look at that. And really, this was the only other one we had. So we had a higher oversold at first, and following right along with that, higher oversold point is the candles. That's where we had that big run. So indeed, the higher oversold was very bullish. Then we consolidated down a bit. You can see this oversold point, not much lower, but lower. This oversold point, not much lower, but lower. And this oversold point about even. So this was the strongest downtrend that we had there. Further proving that is the fact that we went from about $1, from right around $1.05, all the way down to about 97 cents, all the way down to about 93 cents. But these last two oversold points are pretty much equal, so that means that we could see the price entirely consolidated now around that 91 cent area. So that is a good sign, the fact that the last two major oversold points weren't lower. If the last oversold point was much lower than this one, then it wouldn't be looking so good at all. But the fact that they are almost identical indicates to me that this downtrend might be coming to an end, and that swing trade from 91 cents to $1 is looking like a real possibility. Aside from that, though, the RSI is still oversold, so we could still see this thing tanking. Maybe it'll drop another cent or two and really test the 91 cent area. As it is now, it's right about 92, 93 cents, so we could see it drop another cent or two. And the RSI is kind of confirming that. If the RSI was starting to be legging up to the 20 line, I would be much more interested in swinging this. But as it is now, it's still in bearish mode. So we really just got to see what happens Monday. Just to reiterate real quick, Monday, look for support at 91 cents. If 91 cents breaks, look for support at 80 cents, but it's weak support. So it could go into free fall if 80 cents doesn't hold. If 91 cents does hold and starts looking bullish, I will be looking for a possible entrance for a swing trade up to $1. If the price target at $1 hits and everything is still really bullish, I will raise my limit sell to $1.07. And I will gladly take profits there, even if it ends up running to $1.15, $1.20. I'm still going to be real happy with the swing from 91 cents to $1.07. That's still a really nice profit, and I'm not going to be greedy trying to hold for those really high levels. I know for a fact $1.07 is hard resistance, so there's a good chance we get denied there. Anyways, guys, that is what I'm going to be looking for next week on EBIO. As I said, the chart isn't looking so great right now, but those two oversold points being about equal, and a few other factors is telling us that this consolidation might break for the upside. We just got to see what happens on Monday. The last final thing to mention is the fact that our volume the last 3 days was pretty low. So if that picks up on Monday, we might see some better action. But yeah, we'll just have to see how next week plays out. Those are my price targets for next week, my support and resistance levels, and let's see how it goes. Hope this video helped you guys out. Any questions or feedback, please leave a comment in the feedback section down below. Be more than happy to see what you guys have to say about this analysis. And if you're in EBIO, best of luck to you. It's not too bad looking, but if 91 cents doesn't hold, you could be in some trouble, especially since that 80 cent support is weak, so just keep that in mind. All that said, guys, have a great weekend, and I'll catch you next week. Take care.